Alrighty, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. And this episode is sponsored by RevCan. This is actually a paid indicator. It's not just an indicator. They are actually offering, just like I do, is actually offering an entire bundle, an entire package, which also comes with a course and a bunch of other things in there. Not just this little indicator with the arrows where it's going to give you the buy and sell signals. You can actually get the alerts directly on your phone on MT4. This indicator is only for MT4 and MT5. This is not for TradingView. This is actually the first time I'm doing a review on an indicator like this for MT4. So those who are interested and you rather stay only watching the chart on MT4 and not be jumping around from TradingView to MT4 and then making the entries and all that stuff, this is gonna save some time and you can use it. I want to make sure that I make everything clear here. You guys know me, you guys know that I'm always very transparent when it comes to any explanations, especially when it comes to an indicator. Okay, I always say that if you're a beginner and you are trying to use an indicator and you think you're going to be making money just with the indicator just like that, it's not going to happen. Okay, you have to understand that you need to know price action. It's imperative, it's important, it's necessary, it's key to know where a support resistance is. A breakout, when the breakout is actually happening, this indicator is actually going to help you with that a little bit, right? But still, you cannot trust 100% all the time on an indicator. It means that I'm not going to be selling right here, I'm not going to be buying, selling, buying, selling, buying, selling all the time, every time you get a signal, right? And I said it once and I always say it: when markets are ranging, all indicators are going to be lacking. Okay, they're going to be giving you false alerts. Okay, this is normal. This is something very normal. It happens. There's no, as far as I know, and after all these years of experience trading, I haven't come across on any indicator that actually doesn't lack. Maybe there are some in there, but I haven't seen it yet. That doesn't lack when markets are ranging. Okay, most indicators, I would say most of them, if not all, are just trend-based indicators. It means that they work better when markets are trending. That's simple, okay? And this is one of them. This indicator is actually going to help you stay on the trend or give you, better signals when you are actually on a trend. Okay, you can get actually really good buys and sells. And this indicator comes with a lot of stuff. Actually, it includes some moving averages right here. If you want to go, just visit them. This is the actual website right there. By the way, if you're interested in joining in, you can use my promo code. It's in the description below, so you can get a discount in there. Okay, so just go ahead and check it out before you go and purchase it. Now, before you actually do that process, if you're interested, just make sure to watch this video. Most likely I'm going to be posting a couple of them. I'll try not to make this video too long. I'm gonna go over a few things on the indicator, how it works and all that stuff, what we can do. They also have a YouTube channel. You can follow them. They will explain also a couple of things in there. All right. As I mentioned, the indicator comes with a lot of stuff. It comes with a course, explanations, fully breakdowns, tell you what to do, what not to do, which signals to take, which ones don't. Right. All that stuff. Recommend you following also on their channel. You will get alerts. As I mentioned, this is the cool thing. Yeah, you will definitely be getting the alerts on the phone directly, as long as you have MT4 on your computer or MT5 on your computer. So it's pretty cool. The indicator used to be sold separately, okay, and it was very expensive. It was actually $3,000 like for the whole package and over, because there were a couple of things that were sold separately. Now they decided to add it on a bundle. If you're wondering what the price is, it's a monthly fee, but this is actually the price. I consider it's actually a good price, to be honest, for what they offer. Okay, again, they're not just offering an indicator. No, they are offering an entire package, and it comes with all of this stuff. Education is very important. What they are also trying to sell with, it's very, very important. It's key. Okay, education. So I may not be going on how to install it. You may know already the process on how to install an indicator on MT4 and MT5. It's the same process right here. Very simple. You need to go on file, right, and so on, open data folder, all that stuff, yada. Once you do that and you add it into this thing, it will be right here on indicators, right? All you have to do is just drag it and drop, right, just like that. Right here you can adjust the sensitivity. Right here, the higher the number, the less signals you're going to get. The lower the number, more signals you're going to get. I recommend you leave it just like that, standard, right? And the alerts, if you want to change a couple of things, you want to change the colors, you can actually do it right there, okay? Just like that. Just make sure, yeah, everything is fine right there. So just click OK. And this is basically it, right? Now we see that we have this nice downtrend right here. Let me delete this. So we have a nice downtrend. You have to understand, as I mentioned, you have to know price action, guys. You have to know price action before you use any type of indicator. I'm not saying just this, any type of indicator. I've been posting a lot of videos on my YouTube channel regarding other indicators from Mambo FX, from Alex Santi, all the other traders, right? I always say, guys, don't purchase anything just yet until you know price action. If you know price action, you can then add any indicator you want. Okay, try to learn the market raw without anything on your chart, just support and resistors, trend line, breakouts, all of that stuff. It's key, very important. All right, how do we know? Okay, simple. I just by eye I can clearly see there is like somewhere here, oh hold on, somewhere here there is a little resistance and we have a support. So market, oh my god, again I made a mistake here. Market again where I was actually ranging, there was a nice downtrend right here, nice crash, right? But what happened before the crash? Just by adding the dots right here, somewhere, I would say somewhere here, we have a nice support and resistance right there. If we go on the top, this is our resistance, right? So market was consolidating before the drop, and after the drop, market has started consolidating again, and then it's trying to go back up. You see, this is USD JPY on H1. You can use whatever time frame, okay, doesn't matter. It's just going to work. But you have to understand, right, you know, that markets tend to consolidate. When markets are ranging like that, we're going to try to ignore those, okay? We want to catch trends, okay? Only buys. Now, very important. They explain that it's important, it's necessary to use a couple of other additional indicators that you can add. And these are for free, of course. These are actually moving averages. I'm going to be adding a couple of them on the charts. So it's going to improve the probabilities and it's going to help us a lot when it comes to the signals, okay? Because sometimes, yeah, you might get confused. Am I actually bearish? Or am I still bearish? Or is it bullish? We can get confused sometimes. So one of them, the first indicator we're going to be using is the 50 simple moving average. You can use the 50 exponential moving average or the 50 smoothed moving average or the linear weight, whatever. I don't care. It's the same. All right. To me, they change a little bit, but to me, it's literally almost the same. So I'm just going to use the 50 right there, 50 simple moving average. And I'm going to put a red color right there. Okay. I'm going to use the other moving average. I'm going to use the 30 right here, and this is going to be green. Let's try to put this green right there. Okay, so already as it is, you can see that, hey, it's very clear, right? When markets are ranging, we're going to be seeing that the markets are very close to the moving averages, and they start crossing over and crossing over again and over and over and over. You know, markets are ranging, right? When start being, those two lines are separated, when the green line, which is the 30, and the 50 is above right there, right? We're starting to look bearish, right? And if it's breaking your support, more signs for you to go bearish, okay? So even right here, without using the our indicator right there, which is the arrows right there, we can actually start looking for some sales, you know. And when market starts consolidating with the moving averages, you see, price starts getting to a stop, and then it starts just moving up and down, up and down, up and down. you see you're gonna get a lot of fixed signals right there. But I'm gonna tell you right here what to do when this is happening. So if you get a consolidation like that, ignore everything. No matter what sort of signal you get, buy, sell, I don't care. Ignore every signal. What you do is you mark your support, your resistance and your support, and you simply wait for the breakout. The indicator will give you the signs. It will tell you that, hey, yes, we are actually breaking now the support. So the possibilities are going to be in your favor. The probabilities are high now at this point. And also following the moving averages, okay? Now, this is another tip I decided to include. It is not with the indicator, it's not under the recommendation, but I'm gonna add another moving average, which I love, is the 200 SMA. Also, this is another trend indicator, another bigger number. So I am going to be using it because I really like it. I just enjoyed using the 200. It just gives me more probabilities. So in this case, what I want to look in this case for, if I'm trying to look for sales, let's go all the way to the top again. I'm sorry, I got lost here. Okay. So somewhere from here, you see that in the range, all of a sudden we have a clean break right there, very strong break. You could have entered, you see the price came from here. We had an impulse, correction, big impulse right there, huge move, right? We got a signal right here. The market is giving, look at the size of the candles, very important, size of the candle. I'll explain a little bit somewhere there when we are actually on the trend, but right here the size of the candle is key. So my entry would most likely be going once that candle closes. I have to wait for the candle closure, okay, very important. Once it closes, that's your entry. Your stop loss always have to be, this is price action, this is key, you should know this. If you're entering right that on a break, the stop is not right here. You shouldn't be placing it right there, it's too close. You know, market makers, you know, they're gonna most likely try to stop you out most of the times, okay? So you should be, this is one single move, even though it could be a pullback right there, a little pullback, but to me, that looks more like one single move, right? This is just one little candle right there, to be honest. So the swing high, where was the last swing high? It's actually right here. So that's where I should be placing my stop loss. My entry right here, my stop loss right here. I know it looks big, doesn't matter, as long as I'm risking my, you know, my 1 to 2% per trade. That's my entry, and then maybe I'm going for a, let's say, a 1 to 2 risk to reward. Or if you enter on the break, what you can do is maybe wait for maybe these two moving averages to start crossing over, which was somewhere around here. That's when they started crossing over. That's a sign for you maybe to get out, okay, if you want to hold it. If not, if you actually like going for the 1 to 2, take it. If you are halfway down your target, move your stops. I always explain this as well. Just move your stops to break even and let it run. Okay, simple. Keep it simple. Now, what happens? Oh, Eduardo, we have, in this case, okay, well, market broke right here, this low, right? And then, again, we have another break, but hey, we're actually getting buy signals right here. I got another buy signal. Should I buy right here? No. You should not be looking for buys when you're bearish, when the market is, when you have all the confluences, right? Remember, downtrend, we should be looking for sales. Right? If the price is pushing up, we should be looking for buys only. That's the theory, okay? So please understand that and try not to get it confused. We should be looking and ignoring every and any buy signal and take the sales. Also, not all of the sales we're going to be taking there. Sometimes you're going to get too many. You don't want to be getting in and making positions every time you get one of those. I'll explain which ones you should be taking and which ones you should not, right? The which one you should definitely be taking is after the break. If you have a break of a previous low right there, we have a break, then price pulls back to retest, right? That little support right there became a resistance, retest, and now all of a sudden with a big candle, you get a nice reaction. that's your entry. You can take another sell right there, boom, your stop loss above the high, above the closest swing high, and let's say your TP 1 to 2. Okay, just an example. Right, something like that. Now, oh, what happened, Eduardo? He gave me another sell signal here and another one right here. You know, the market already took off from here. If you took this entry, this one right here, it's starting to look very far away. I would not take this one because it's coming to a support. I would wait for that support to be broken and then maybe I can get in. What happened? With the next signal, it broke, right? But the break right there, look at the candle. It's like a pin bar right there, right? Doesn't have volume in it. So you can take it, but I recommend not. I recommend not to take it. They also recommend on their course, inside their course, they recommend not to take those type of entries right there with a small candle. If the signal would have been given with this candle, maybe, you know, but hey, still play out. If you would have wanted to take this was your entry right there, your stop loss above the swing high, still play out, right? But again, what the idea is to try to not take this type of entries with those little candles right there. Okay, you want to see a break and breakout and retest at least. So right here, where we're getting a little resistance, all of a sudden price touch once, touch twice, and then continue going to the downside. It's giving more signals right there. At this point in that double top, maybe, or in this entry right there, the price ended up breaking that little. Hold on. Ended up breaking that little support that it was building. It broke. It gave you the signal. Maybe this was the entry, up a stop above the last high, and you go for that 1 to 2, and you continue with the trend that way. Okay. Now, how do we know when to stop? Because the market keep actually giving us sell. Maybe at some point right here we got stopped out. That's gonna happen. We don't know until it happens, right? It's normal. We don't know until it happens. We had a support right there, right? Price came, boom, created that support, and then all of a sudden it broke, right? Let's say you actually entered right here, right? That was your entry, and you placed the stop loss above. What happened? Oh, price came back on top and it stopped you out. If it's climbing back on top, you see now you're seeing for the first time on this downtrend, you're seeing for the first time a violation. The price has broken now to the upside, the first structure right there. What is that telling you? You see, so it's a sign for you to, hey, okay, I might actually stop selling now. It was a nice downtrend, and at some point, you should know this. Trends are not going to last forever. At some point, they're going to start reversing. So if you're coming from all the way on the top, hey, this is, it's a nice downtrend. Hey, dude, the trend is not going to be bearish forever. At some point, it's going to reverse, and you might have a loss. It happens. So take it. You took that loss right there, price to stop you out, and then you're simply waiting for more signals. And just all of a sudden, you start seeing the market starts just slowing down. You're starting to see the moving averages come closer together, and now they are crossing over like that. Okay, that's some signs that maybe price wants to push up, but you should not be looking for buys. At this point, you have to wait for what? Look at where you are, right? You have to wait for either the break of this low to continue maybe with the sales, right? Or wait for the price to start breaking above the 200 to start looking for buys. It's too early to look for buys right here. That's what I'm trying to say. Very early to start looking for buys. So please ignore everything right here. All these buy signals, sell signals, buy signals, ignore them. Okay? Very important. Now what happens? My support, right, my resistance right there actually got broken, and it comes back to a retest. So once the price retests right here and start pushing up, all of a sudden what you see? All lines, pretty much you see the green now is above the 30, SMA is above, the 50 is below. We are climbing back on top of the 200 right now. That's the best buy signal right there. You see, it gave me a buy right here. It gave me also a buy right there. If you would have wanted to get into this one, let's say, why, Eduardo, why didn't you take this one? Okay, if you took that one, remember, price action. Price recently broke. What I would do, in my case, I would wait for retest. But let's say you didn't want it to wait for a retest because you don't know if market will retest. Not all the time the market will come back and retest, right? So let's say, oh, you know what, fuck it, I'm gonna enter right there. Okay, that's your entry. Where's the nearest swing low? Somewhere about here. So this is where your stop loss should be. This is one single move. Okay, swing low right here, entry, stop loss, and then take profit. Maybe that 1 to 2 will be somewhere there, right? But you see, let's say you didn't get in, you could have entered either here, or you could have entered with this candle right there, right there. You see, it give you the buy. Sales, you're going to ignore every sale. Why is it giving me a sale right there? You know, it will give false signals, but you should know at this point we're going to be ignoring all the sell signals, and we only should be looking for buys. Now, when do we look for buys? As the price keeps going up, well, you have to mark up your structure. You see, okay, well, there is a little support right here, right? This is a big impulse. We do have a big gap. This is order blocks, basically. There's a big imbalance right there. Let's say it's going to continue going to the downside or what. Market is creating a little support, right, in this area. What I want to do is now wait for the two moving averages to cross over and to get a buy signal after the crossover, because I'm getting a buy signal right there, but I'm bearish right here. It's telling me that it's bearish momentarily, you know. So I have to wait for the crossover, and the buy signal has to happen somewhere above for me to enter. Okay, so at this point, just waiting for that position. Okay, so I'm taking the time right now, guys, to explain how you use this indicator. You see, this was a nice uptrend as well. Look at this from where it's coming. Wow, look at this nice trend right there. Beautiful. So this is what we're trying to look. We're trying to look for currency pairs or markets that are trending. Try to ignore those that are consolidating for a little bit. Maybe set some alerts and wait for the breakouts to happen at some point, you know, so you can start maybe looking for a downtrend or uptrend. But markets that are ranging, ignore them. Okay, there are plenty that you can be looking at, you know. So again, what do we have? Support, resistance. We're going to be looking for the buys when the market is testing a support or a resistance, or it's breaking. Maybe if you get in the sign and the market is breaking a support or resistance, right here we had another support and resistance right there, right? So you decide when actually to enter in this case. As I mentioned, I recommend waiting for a breakout and a retest. Okay, some sort of break of a structure and retest, and look at the candles, look at the moving averages. Okay, when they crossed over, means that market was sort of moving sideways for a little bit, and then right here they crossed over again on bullish, and then boom, you start seeing the actual first bullish sign right there. You could have taken this one maybe, but at the same time you're actually below or sort of there touching that resistance right there. So this was a little tricky. Maybe you waited for another candle, you enter on the next one if you want, and the stop loss below the swing low, you know, but that way you continue. Guys, this is part one. I'm gonna keep making more videos about this one. I didn't want it to take that much of time, but this is how you can use it, how you can implement it. It is very effective, as I mentioned, if you follow your price action, okay, and if you follow the rules. All right, I hope it makes sense. Thanks again, guys, for watching. And again, if you're interested, I'll leave the link in the description below, and you can get the actual discount using my promo code. So I'll see you in the next video, guys. Take it easy.